As the name suggests, we have to measure the volume along with the price. The money flow index is a technical oscillator that uses price and volume to identifying the overbought and oversold condition. It can also use to spot divergences which warns of a trend change in price. The oscillators move between 0 to 100 and the money flow index incorporated both price as well as volume data. It is much more balanced oscillators which focus the price movement as well as the mass psychology participation. This indicator is typically calculated using 14 period of data. A MFI reading above 80 is considered to be overbought and the MFI reading below 20 is considered to be oversold. Overbought and oversold does not necessarily mean that the price is reverse. Only that the price factoring for volume is near the high or low of its recent price range. Many of the analysts using 90 or 10 as overbought and oversold levels to reduce the fall signals. These levels are rarely reached, but when they are often reached means that the price could be due for a directional change. That means it is a very sound signals for reversals. A divergence between the indicator and the price is also to be noteworthy. For example, if the indicator is rising while the price is falling or flat, the price could start rising. As we see a sample chart on your screen, a money flow index is plotted on a lower image and the price chart will be plotted on an upper image. As we see, there is a rising tops in the last phase of November and December. The price will create a new high, whereas the MFI creates a same top will create or lead to a price change. Whenever the price reaches to a high and MFI is also responding to it, it shows a greater price trend. How money flow index works? We have to understand by the example chart, and we have to also looking for some important parameters. A divergence is when the oscillator is moving in the opposite direction of the price. This is signal of a potential reversal. As we see in the previous chart, in the month of November and December, the price divergence is there. For example, a very high money flow index that began to fall below a reading of 80 while the underlying security continues to climb is a price reversal signal to the downside. Conversely or vice versa, if a low MFI reading that climbs above a reading of 20 whereas the price securities continue to be downside, that shows a price reversal signal to the upside. There are some limitations of using money flow index, so you also use some of the another indicators to confirm the signal. The money flow index is capable of producing false signals. When the indicator does something that indicates good trade opportunity is present, but then the price doesn't move as expected, also create to a losing trade. The indicator may also fail to warn of something important. Traders use another form of analysis and risk control and not rely exclusively on one indicator. I hope so you easily understand the money flow index and also consider the importance of money flow index. In brief, if I pointed out in three major important points for money flow index, the first part is The money flow index consider price as well as volume. It is both volume weighted indicator. The next important thing is we have to consider the divergences to play a direction reversal. And the third important thing is we have to consider another indicators to reduce false signals.